Marc, 50-year mortgages.
50-year mortgages. It'll be an interesting topic.
We're going to go through it, I guess the good, the bad, the options, the thoughts out in the real estate
It's interesting.
world
It's an
here.
interesting one. Yeah.
Stay tuned. Where to begin? Would you like to start?
Not really, but all right. So they're talking. Trump is talking about 50-year mortgages, and I think the reason, obvious, not obvious, but because prices are high, this real estate market is a little
Wonky.
on hold. I don't know. In a lot of areas, it's on hold. So, his solution is just extend out that debt. What do you think about the 50-year mortgage?
I mean, initially it sounds good as a way to enter into a property. I think over the long haul, if you plan to stay in your house a long time, especially, I mean, nobody stays in their house 30 years, 40 to 50 years, but you're going to end up, if you do stay in a long time, spending a lot more for the house. On a 350 house, I saw something about paying like basically triple over that 50-year period. So I think maybe you need to lower your expectations for pricing, maybe just save a little for a down payment to get that nut down. I don't see a lot of people even using the 40-year mortgages, right? Do you? I mean,
No, I don't think I've ever had anyone use a 40-year mortgage, which I believe are still available, but I've never done one.
Yeah.
My thoughts on this are I always get a little nervous when you start using financial wizardry to fix a problem. Like, if prices are too high, if things are unaffordable. Let the market sort that out, because if a bunch of people don't buy, then all of a sudden prices will fall and it gets to the point where it's more affordable again. I kind of would rather like to see that versus let's, do some. With that being said, the reason we are able to have a healthy real estate market is because there is the ability to borrow money to buy houses. Like, if you go to other parts of the world where they don't have a mortgage system, it's very difficult to own property,
Right.
and it's nice for people to own property. I think it's good for a nation. I think it's good for the community when people own property, because there's a sense of ownership, the pride of ownership. They go and they buy things to improve the house, which helps the economy. There's a lot of benefits when people own real estate. So I'm a huge fan of that. So
You
I think,
are no.
yeah. But I think you got to do it in a way where it makes sense. Now, I can see. Sorry to ramble, but I
I
can
want to hear
see.
you.
I can see. If you wanted to get into a house because you thought it was going to really appreciate, and you can control that house, yeah, go get a 50-year mortgage if that's makes the only way you can do it. Now, just realize that you're going to pay an insane amount of money in interest.
Over
Insane
time.
amount of money. So, just so you understand, I was looking at some numbers today. So, if you borrow $450,000 at 6%, you have a 30-year mortgage. Your payment is like right around 2,700, I think.
Okay.
And if you do a 50-year mortgage, it's only $350 cheaper. So $350, it maybe is a lot of money, but at the same time, you have an extra 20 years of payments.
I
That's
think
an additional 240 payments. 20 times 12, yeah, 240 payments.
like I guess it depends. Like, what is your goal in terms of how are you going to utilize the property? How long do you think you'll stay in it? Nobody has a crystal ball, but like, do you think you'll stay in it long term? Is it your goal to pay it off, or is it like just a stepping stone, knowing that if you pay this and you want to sell it in 2 years or whatever, that might not be the best option, right? Because your equity position is just going to remain the same.
Zero. You're almost going to be at zero. Zero principal's been paid off after 2 years.
Unless you plan on just throwing larger chunks down. I mean, it just depends. I mean, I definitely feel like if you're considering a 50-year loan, that maybe it's not the time to buy. Maybe you just stay renting. I think there's a time and place to rent, and there's a time and a place to buy. And I mean, for most buyers right now, I think it's a great time to buy. I think there's, what's the Warren Buffett saying?
Be fearful when others are greedy, and be greedy when others are fearful. And right now,
I think it's a great thing.
And in Florida, especially, it's there's a lot of sellers out there. So our inventories have gone up, and just I see it a lot in a like a first time home buyer basis, because Camila, our office operations manager, is going to buy a house here, and she's been looking for the last couple of years. And I even said it, I'm like, like a year or so ago. I said,
wait
maybe
to
wait,
wait.
you know, if you're not in a hurry to be a homeowner, then maybe wait because you might get a better price. And that's been true.
Right.
And so she's got way more to choose from now than
You
she
do
did a
have
year or two ago. A lot more to choose from. So
I didn't know you had a crystal ball. I'm gonna just next time I never buy a lottery
every
ticket,
time,
but
every
maybe
now and
I'll
then,
ask you.
every now and then I get lucky. So,
Yeah.
so I think, you know, and you know, the 50-year mortgage is really going to be utilized by people like that, you know,
Right.
first time home buyers and people that are just squeezing in. But again, I think, you know, 50 years is an awful long
It
time to be
is.
paying off a house. So I'm mixed about it. You know, and here's another thing: you have a whole new big buyer pool, right? A pool of buyers that might raise prices even more. So then we're back to another situation where prices are higher again or unaffordable. So I don't know. When you start messing with the market dynamics, these are the repercussions. So I mean, we've had 40-year mortgages for a long time and no one uses
I
it.
just feel like nobody that we know. I mean, maybe they switched it at closing. We didn't know, I guess, and we're not privy to every
Yeah.
little thing. But I just feel like it's important to have a great, obviously, realtor, but also a knowledgeable and lender that educates you. Like ask you the right questions, not just forcing you. Like if I just say, hey, I want to do a 50-year loan, he needs to ask you the right questions, like what's your goal? And like, these are some other options. Maybe the 5-1 ARM is a good product for you. Maybe a 15-year note's better for you. Like maybe you just need to have all the information and have someone in your corner that's looking out for you. And I think educating is really important. Like, is that really to your benefit? I mean, if you're really squeezing $200 a month to get into a house, like I just feel like that's a little iffy. I mean,
Although I will say the first house I bought, I was squeezing. You probably were too.
Yeah.
So having another option out there, 50-year mortgage, it's like, hey, I really want to be a homeowner.
Okay.
And this is the only way I can do it.
And if you have enough cash reserves, enough if something happens with the roof, the AC, like you always want to have that no matter what loan. But
so I don't, in that sense, I think it's going to be a good thing for people that really want to be a homeowner now. And they couldn't, and they can't otherwise do it.
But let me play devil's advocate. It's like the people want instant gratification and success now. There's power in being able to delay that, like Camila has done, delaying that instant gratification, which is wrong with one of the many things wrong with our society, right? So if you don't need to do it and you do want to save more and you want to have a lower payment and yet not have the 50-year loan, I think I would recommend that. But we're also not going to stand in the way of if what you think is best for you and your family, right? So
yeah, I mean, if you think about it, if you're a renter, you're at the mercy of the market in terms of your rent. If rents go up, you're going to pay more. It's just the way it works. It's supply demand. So at least in this situation, you have a 50-year mortgage. Your payment is locked. In theory, if you get a fixed rate and all that, your PI is locked, not your taxes and insurance.
Right.
But your principal and interest are locked. There's something, to be said about that. And you're a homeowner, and you know what? You make more. You're not making a lot of money now. Then you start to make more money in your career. You can pay that thing down faster, or refinance.
Well, I mean, and we're so partial because obviously we sell real estate. There's other factors that are not fiscally measurable by owning real estate. It's like I can go in and knock walls down. I could do this. I could do that. I can improve. I can paint outside a different color that I want. And you're not at the mercy of someone saying, I don't want to rent my house anymore. I'm going to move into it myself. And you're out on the street, subject to the changes in the market. Some people have been renting a house for years and years and kind of have a lower price baked in because some landlords like having a
good tenant.
Yeah.
A good, reliable tenant.
And then eventually when they get over that, or maybe there's a death in the family and they have to sell the house or whatever, you are at the mercy of somebody else controlling your future and where you live. So that's
and that's not a fun place to be. At least I don't like it. I know you don't. So it's like, hey, we just doubled your rent. What are you gonna do about it? It's like, I gotta move, and it's like, so you're at the whim of someone else, and I don't know. I never was really comfortable with that. That's why I've been a homeowner forever. But
and rents have gone up too. So again, I think that there is definitely a time to rent, and there's a time to buy, right?
So I think overall, I don't think it's a horrible idea because there's going to be some people that will use it and the ability to get into the market, which like if I don't understand how people buy in California, for example, like the average price out there is just insane. I'm like, how does the first guy how does he do the first house? Because you got to get in at some point, right?
Generational.
Yeah.
You know?
So then, it's like, okay, so you get a 50-year mortgage. You're in the market. So if the market's going up, you're benefiting from it. If you're a renter, you're not benefiting from any of that.
I guess, too, if you're in a 50-year mortgage and something happens in your life where now you have to sell, you've already put yourself in a position where you're not going to have a lot of equity in there. You're going to have fees to sell. Like if you have to buy a 50-year, you're sell your house within 2 years, right? Now you have fees. You don't have it puts you in a rough spot.
You better hope the value of the hot property went up.
Yeah.
So you better hope the property value has gone up so that you do have some equity because there are fees to sell.
And there's like, it's more as far as markets, like the value going up exorbitantly. Obviously, we've kind of subsided on that and it's become more of a normal market where it's just a marathon. It takes a long time to make that kind of money where we, 2020 doubled our money, which is not real. So I would go into it more with like a very long-term mentality or like
let's say you wanted to control a lot of property. You just were very aggressive and you say, I want a huge portfolio of properties. If you go out and use a 50-year mortgage and can buy 10 properties, I'm not suggesting anyone do this, but if you were able to possibly do that, like buy one every year, that's your home.
You're subject to the market.
Yeah, but I mean, it would be a way to get in to control property with, I guess, lower payments.
It's more. I think that's risky.
Super aggressive.
I think it's very risky.
But it gives someone the ability to do that 50-year mortgage. If it was myself or if it was my friend or relative, I would say be very, very careful in the 50-year mortgage.
What's the last loan that you did? What was the setup? A 30-year?
That I borrowed money?
30-year, I would guess, right?
30.
Yeah.
I
did the 15-year. I did the 15-year. I tell you what, seeing the principal go down on what you owe is an awesome thing. I was like, ooh, I like this. It's like addicting.
It goes down 15 years awesome. Dramatically. You're paying that off so much faster.
You're paying more every month, but I'm like, I looked at it like a savings account, right? Yeah. Same thing with the 5/1 ARM. I went into thinking I would just have a mortgage for 5 years, and then you just stay disciplined, and it's well worth it. There's also programs if you do the interest only that you can do what's called the recast. So if you end up throwing like an extra chunk of money in, you fill out this document, you pay $250 instead of a whole appraisal. And they recast, they re-amortize it, and now you have a new payment, so you can pay it off even faster. So there's other things. There's so many products that we could keep going on.
Yeah. That's why you need a really good lender.
And an agent that can, and even if the lender doesn't bring it up, have your agent bring it up. Like that's why we ask so many questions, like how are you going to utilize it, and all the right questions to really understand both your property needs and your financing needs.
It's interesting because the 40-year mortgage has been around a while, and I don't think I've ever had anyone use it.
Yeah.
So will anyone use the 50-year mortgage? Maybe. I don't know. I
guess what?
tend to think not so much.
You don't have to.
But you don't have to.
Right? Yeah. It might become available. I mean.
Yeah. So. And I think it's just a Band-Aid for a market that's a little stagnant. I think it could certainly help the market in certain areas and with certain people and certain, things like that. But by and large, I don't think people would use it all that much.
I mean, it's also like people that are just waiting for the interest rates to drop. I mean, okay, they are the lowest they've been in 12 months. We haven't seen a huge increase in the levels of properties being, again, these things are marathon things that don't just happen overnight. Just because, the Fed reduced doesn't mean the mortgage rates will reduce. But that being said, they've been lower in the last 12 months than they have.
And if you really think about this, they're very normal rates. 6 and 7% is a very normal rate. That 2 and 3-4% thing was an anomaly. Could happen again, but I don't think you want to wait on it. I really don't, because you could be waiting for 20 years.
Well, I heard on a podcast about the people that have really low rates. I don't know if it's available, but I heard there might become a hybrid loan available coming soon, which is, okay, they keep whatever you owe on your house. Let's say you have 2.5%, whatever, and you owe 500,000. So they'll keep that going into the next house, and then whatever the difference is, have that promulgated or amortized rate on that, and then combine it. So you have part of the loan with the existing, I don't know,
the newer rates,
yeah,
well, the
like
old
it's
rate,
a hybrid.
the old mortgage, and then the new mortgage. But somehow I haven't heard that.
It's an
Um,
interesting concept that I don't think has been rolled out to my knowledge. But,
no. Yeah, we'd hear about it. But that would be interesting. I mean, you know, there's a lot of people locked into their home that are not going to move because of that interest rate. And I don't blame them. You know,
it would
I really
help
don't blame
give them the nudge if they really had a need. Like, I need to move closer to family because somebody's sick or whatever. Like things happen in life, and that's why, like, you know, you just want to be overly, I think if you're going to underwrite the numbers, be overly conservative, because things happen that are out of our control in life, and that's just life. So I would be.
And if you think, and I was just thinking about this, you know, if you wanted a lot of control over this stuff, well, one, I hear they're going to have a higher interest rate than the 50-year mortgage because it's going to be a riskier loan because there's no equity's not being built up. So they're going to raise if this comes out, they're going to have a higher interest rate. Just like 15-year is a lower rate than a 30-year, 50-year is going to be higher than 30-year. They have to do that because the risk of the loan is going to be greater, so they're going to want more interest. So,
I mean, because the 15-year is under 6%, right? Yeah. It's like what, 5.75 or something.
So if you were like, I just want the lowest payment I can get, and I'll pay extra every month.
Yeah, right.
But I only want to owe this amount every month, but I'm going to pay this.
You got to be disciplined.
Yeah, you got to be disciplined. And, you know, it's like, okay, well, you have a rough month, the AC went out, and so you still only have to pay that. But if you're disciplined and you're paying this every month, then it gives you a little more control. So I don't think it's a horrible thing. Yeah. I don't, you know, we have a 40-year mortgage and not a lot of people use it. So I don't think a lot of people, if they come out with 50-year mortgages, I don't think a lot of people would.
And don't forget too, like if you're in the process of buying or thinking about buying, remember you can always ask the seller to help buy down your interest rate as well. And that's another option that people kind of forget about. As long as the numbers work and they get the net, and then, you know, both parties agree, that's definitely a great viable option.
And it appraises out. I mean, you can have them. If it appraises $20,000 more than what your contract is,
you got some money to play with.
You can buy down the rate. Yeah. That's a really good strategy.
It's beautiful when things like they seem like they're going to go sideways, and then the appraisal comes in high, and you know things can work out well. So.
All right. So if you were the king, would you allow 50-year mortgages, or would you not allow 50-year mortgages?
Let the market always tells the truth.
The market figures it out, right?
Let them give people options. I mean, we live in America. Everybody likes options. I know they want instant gratification. I think talking through a lot of these things, of course, give them.
So you're the supreme ruler. 50-year mortgages or not?
Yeah, let them.
Okay.
Because a lot of people are going to decide for themselves not to.
Yeah.
Because we're already seeing that as evidence with the 40-year. But
yeah, you still have to be careful though, because remember back in 2005 and 6, they were giving money to anyone.
Yeah.
And people took it, and then they bought stuff, and the market went up, and we had this huge meltdown. So you still have to have some restrictions on
live and
people.
Live and learn. I think it's as you get older too, you learn like what you really want out of this whole process too. So Marc, thanks for joining me back on my channel, and thank you for subscribing, liking, commenting, sharing. I really appreciate that. And if you want to call me, if you have a property from Manatee, Sarasota, or Charlotte counties, I'd love to talk to you, and I can be reached at 941-544-7690.